The markets are trading sideways a bit. Now, would you think back with me to why you came into the crypto market to begin with? What did you want to accomplish? And how are you feeling towards that? How long is your timeline of that? Though for long term success in crypto, we want to have a long timeline for our expectations. Doesn't it help to have market updates along the way? With that said, we have Paul joining us today for some top notch price analysis. Welcome to the Crypto Rain channel. I'm your host, Jay Rain. If you like money in crypto and you're looking for a real investor's take on the crypto market, join the Rainmaker family by liking this video and subscribing with the all notifications bell enabled. Do note I'm not a financial advisor. I'm a crypto investor myself, sharing with you how I think about the crypto market and specific cryptos I like. Do note that I do own or plan to own most of what I talk about on this channel because I don't talk about crypto projects I don't believe in, though on Thursdays, we're taking many of your picks from the last Thursday's video with Paul and putting them into the lineup of what we're going to look at. Special shout out to our Patreon members. We do have a private Discord there. Our Patreon members get access to that I interact with frequently. Now, sponsor disclaimer, it says at the beginning that this might be sponsored content. Well, it's not really sponsored content so much as our strategic relationship with OneChain been good to us, and they give us 500 won every month to give away to the audience. So make it rain on that like button. Strap in for the show. Let's welcome Paul joining us from Definity.
Hi guys, great to be here.
Hey, it's so good to have you. I know many of our loyal audience members love when you join us, and I love it too.
That's very nice to hear. Thank you. Appreciate that.
Yeah, so we've been in this sideways trading pattern, going below 20,000 on Bitcoin, going above it, going below. It'd be great if today we could take a look at some of the majors, anything also that you see going on in other markets that might have some correlation to what might affect the crypto market. And then we'll jump into some of the viewer picks from last week. Sound good?
Absolutely. Yeah, that sounds like a plan. Great idea.
Yeah.
I think we need to start off with what we were looking at last week with the US dollar. And I was saying that we're trying to find a top, like the end of this move. Now, that didn't mean that we were actually at the top, but I was looking for an event that might indicate that we have finally seen the last of the move and the dollar's going to start to weaken. Not necessarily because that would help crypto, but just because it indicates a risk on situation, moving from a risk off to a risk on. And that would also happen if yields started to go down, i.e. interest rates start to fall, and people decide to take a bit more risk. Now, I was looking for potentially when the Fed raised interest rates, and there was a little stalling of the trend, I think, last week, but then a pattern came out that was really bullish. And also, I thought that we were going to get non-farm payrolls on the Friday, but of course, you had your fantastic 4th of July celebrations, which meant that the non-farm payrolls, which is usually the first Friday of the month, was pushed to this coming Friday. So when this goes out, depending on when you're actually watching it, non-farm payrolls might have been released. So what I'm looking for is that final event that could trigger a panic buy into the dollar that may be the last of the move. Now, if we could just quickly look at the dollar index, this is the chart that I've been tracking. This is the bullish chart that has been indicating to me that the dollar is going to keep going up. And last week we were in this little consolidation. I thought this could be building into a top possibly, but I needed a bit more evidence. And then it became clear that actually it wasn't going to top out. It's really going to accelerate higher. And my very long-term targets were at 108 and they're coming into focus. So it would be kind of poetic if 108 gets hit just on payrolls and then the market reverses and we can start talking about risk on. Now, what's really interesting about that is that yields, remember we talk about how yields affect people buying houses and speculative trades and all that sort of stuff. Well, yields was correlated pretty well with the dollar moving up. So as inflation's gone up, as the interest rates have gone up, yields have gone up on government bonds. But you notice from this chart here, you can see that's not actually what's been going on in the last couple of weeks. This is why I was being so cautious about calling for the next dollar move, because there is now a divergence between the price action in the dollar, i.e. the dollar's moving up, but yields are starting to move down. So this is telling me, you may have heard the phrase, maybe I've used it a few times, or maybe you've heard it elsewhere in the markets, but you may have heard of demand destruction. And that's because the dollar's been strong, interest rates have been strong, and energy prices have been strong and or high. So that's really hurting Americans. It's hurting American companies. And I think damage is going on in the background that the Fed is going to have to reverse, and the yields are kind of anticipating that move. So that's why we're seeing yields starting to move down. Now, if you want a really interesting example, we've heard about how food prices have been going up. But look at this chart of rice futures, which looks like it's going to go down. I know you're wondering, cryptocurrency channel, and we're talking about rice futures, but look at corn futures. Look at how this has just collapsed. Beautiful head and shoulders pattern, by the way, absolutely amazing, and a collapse in prices. So we're seeing what we call demand destruction, which has to be reversed. Now, what does that mean for crypto? If I could jump into the chart of the Bitcoin chart, we can see that, again, last week we were looking at this 19,666 level as a buy point. The market went through it on a very thin Saturday sort of afternoon, evening here. Obviously, that was sort of more morning time on a Saturday. But who's trading crypto on a Saturday? Probably you guys, actually. But I certainly am not. But I happened to look at it and think, wow, that's a big move for a Saturday. And then it reversed very quickly. And I thought, that might mean that we've hit a low. But it went sideways. And now we're in this. Let me zoom into this so you can see it a bit better. This is like a triangular constriction pattern. And they're usually continuation patterns. So you get a downward trend, a triangular constriction, and then another downward trend. Now, if that happens, it means it will go quickly. It will go this week, and it will take the low out. My negation point for a reversal pattern was at 18,600, which it's traded. It's just skirted with that level and moved back up again. But it hasn't gone either way. It's not given us a signal, either bullish or bearish, to indicate this trend is over, which is a little bit frustrating. So we're seeing the dollar move up, which is probably more bearish Bitcoin than bullish. And we're seeing yields go down, which is kind of a bullish sign. So this is caught right in the middle, and we need to wait to see. Now, by the time you're watching this, it may have moved. So the level I'd be looking at for a base to negate this triangle would be this 21,886. So the top of this would complete a double bottom formation, and that's a small pattern, but it'd be enough to take it perhaps up to the next sort of resistance at 26-27, which would be fairly decent. Now, what I think will happen is I think it will have a go at the downside. It may be sharp, but the next Fibonacci target is around 14,700 or 800. So it could go for a spike, another low, right, really shake everybody out and then go higher. I'm not sure which one it's going to be. I'll be honest with you. I don't know. I'm just watching this really carefully. But that's where we are at the moment. We're kind of right on the edge of either confirming a base or it continuing downwards. And those, I've got to go by the levels, but we should know very soon.
You noticed how there's usually an inverse correlation with the dollar going up. Say the dollar does continue up higher in the dollar index against all the other baskets of currencies. So say it does go up to the 108 or above it, like you were showing.
Yeah.
That would usually correlate then with Bitcoin going down, and maybe those two things play together. It does hit that. Bitcoin then drops one last time, shaking out as many people as possible. And then it's put its low in. And then, we're in a place that is a lot of fun to be. And that's a place where we're on an uphill climb. After it's depressed a lot of people, washed them out of the market. And a lot of people that didn't come in here with proper expectations have now left, licked their wounds, sold their bags at lows, and then are going to miss this wild ride up.
Yeah, absolutely. I mean, look, crypto genie is out of a bottle. There's no way it's going back in. I know there's some people that say, everything's going to zero. I don't believe that, because there's some amazing technology out there that is world changing. And yeah, okay, so we're going to see corrections, but this correction is part of a correction in everything. I mean, look, we could look at like something as as valuable as the gold price. And you'll see that that is going down. And it's not the end of gold, is it? But gold is collapsing. And that's
Interesting.
collapsing because the dollar's rallying and because apparently nobody wants it as a sort of safe haven trade, even though there's a war going on and warmongering in other parts of the world. So, it's interesting. This is a really good lesson in how markets go from being, overly optimistic to overly pessimistic. And I don't know if anyone has got a friend who's like that, who's either really happy or really down. There's some people are like that. The market is that times 10, and you just need to recognize when it's getting too far one way and too far another. So it'll always feel like the end of it when things are going down. But I'm quite buoyed by the fact that the market has gone sideways whilst the dollar's been going up. We need that kind of divergence to indicate that there's buying. Now, what I think is going on is I think the non-farm payrolls figures could be really actually much stronger. I think the labor market is quite tight because just sort of finger in the air. I mean, just because I look at charts, it doesn't mean I don't ever have an opinion on the fundamentals, but it seems pretty clear that during COVID, people got laid off, furloughed from their jobs, and there wasn't much demand, and then boom, all of a sudden everything's open and everybody wants to go out, everyone wants to travel, everyone wants to spend money, and it's like, well, okay, what do? You've got to start hiring people back. These people want to be paid a bit more and will ask for more because they're renegotiating these contracts. So it wouldn't surprise me if the dollar market, like the dollar trades, represent a kind of anticipation of that number on Friday, and then when we get it, it could be the end of the move. I mean, it's worth noting that the dollar's going up, but other countries are going to be raising interest rates as well. They may be behind the curve too, so it's quite possible that other rates might go up, perhaps not as much, but the heat will come out of the dollar, and yields are definitely dropping. I mean, there's no doubt about that. Whether that turns out to be a big correction or not remains to be seen. But yields going down, this is the first time since I've been on this show that we've seen that correlation break, where the dollar's not really followed the path of the yield market. So I think this is really interesting. This is a time to be watching closely, not to be turning your back on the markets. Because it's, as you said many times, we should get a t-shirt, buy when it's boring, certainly watch when it's boring and get ready to buy, because it's felt a little boring as well with the market just going sideways. But, still wondering about this one final move. I don't want to see that final move. I'd rather it doesn't go down. I'd rather it just go straight up, because I think we've had enough of these corrections. But, the market does what the market does, and I have to accept it. I can't tell it what to do. I wish I could.
Yeah, right. What we try to do is make our best guesses as the direction that it's going. But we do have these massive swings. And what's funny is the level of messages that I get on YouTube now that are kind of negative or insulting or things has gone way, way up, which is actually a really good signal. That means people are capitulating, right? That they're pissed, that they're mad. And what's crazy is how these cycles go. They swing really low and they swing really high. And what's funny is when prices are really high, and there's this meme going around on Twitter, it's got a line of people to buy Bitcoin at 65,000, and at 20,000, there's nobody in line. It's amazing how that really shows what really happens. And when prices are their best, people are freaking out and they're mad and they're angry and they need somebody to yell at or scream at. When it's the best to buy, and it is frustrating when you have coins that you paid higher prices for. I remember being extremely frustrated in 2020 because I was dollar cost averaging in at lows, and sometimes it just goes lower, and then it goes lower, and then it goes lower, and then all of a sudden it goes higher. And then it goes way higher. And then you forget all the pain that you went through until the next time you're in that same place. And then you're like, okay. So some people take a very different approach. You wait till you have confirmation that it's then going up, which is why I love bringing you on so that our audience gets a full spectrum of different ideas on how to play this. I tend to dollar cost average when I like this low, and sometimes it's not the bottom, and then I put more in and it goes sometimes lower because I've been on the other side that sometimes I miss the moves up. And that's a painful place to be too. Something I wanted to buy, and next time I look at it, it's already gone up 10x, which at that point, I don't move into it unless I see strong signals it's going to continue to move up. But this gives the audience, like the goal of this channel is to create the most informed audience in crypto. And so you bring a very valuable, healthy perspective, especially to a lot of our audience members that don't have much exposure to price analysis. So thank you. Yeah, and thanks for going into all these other markets because they do have correlation with a lot of money and where that money is going. And when Bitcoin's really going to go higher is when some of that money moves back into Bitcoin and then other crypto assets. And it doesn't take a lot of that money that's in all these other markets to make crypto move up tremendously because crypto is still a very small market compared to all these other markets out there.
Yeah, I think you're probably going to see the corporate market getting more and more involved in the technology, and that could be the next phase. But what is interesting to do, I would suggest that if you get a moment, viewers that are watching this, go back and have a look at a chart of the Nasdaq and some of the individual stocks. Have a look at Amazon. Go back to like 1999, 2000, and then see what happened 2001. When it crashed, and then how long it spent on its lows before it went back up again. I mean, it took a long time for that business. Millions of dollars were spent before it became the powerhouse company that it is today. And this is still very early phase of all these technologies. So, it's going to be here for a long time. So we may as well get used to these big price swings.
Yeah, agreed. And my methodology comes from a place of what works well with my personality, which is I don't like to watch the charts every single day on every single item, even though I have all these computer screens in the background. I do like very focused work for 3 or 4 hours, and then I like to be doing other things. And I might read articles later in the day, or I listen to a lot of audio. But that's why I dollar cost average and other things. Some people like honestly making trades, and in your price analysis is so key because generally over time through technical analysis people can learn how to see when it's likely to move up so that you're taking strategic bets, see when your analysis is likely to be wrong so that you know where to pull the ejector seat so that you minimize potential losses while taking strategic bets that it's going to go up, and it's just putting the odds in your favor so that sometimes you'll lose, but when you win you just win a lot more than you lose. And that's actually the essence of crypto investing in to begin with, is that some people come into the space thinking they're never going to lose. And if they have that expectation, they're completely wrong. What you're looking for is to make guesses based on price analysis or fundamental analysis, or hopefully even a combination of both, as to what has strong likelihood, so that you're taking bets where you'll say on average you're only 50% right, but when you are right, your gains are so high that it really more than balances out when you're wrong.
Yeah, I mean, you can be 80 to 90% wrong on your calls and still make a lot of money, because and people find that really hard to believe, but it depends on how you manage money. It's risk management that's really an important thing. But you also mentioned it before. It's also what works for you. I mean, if you're using what we call real money, which is non-leveraged trades, then you have got all the time in the world, because there's nobody sort of knocking on the door saying you've got to have a margin call or get forced out of a position. Now, that doesn't guarantee success, but it does allow you, like you say, to not have to watch the market every day. But it's all down to trading personality. And if you want to you could put all the eggs in one basket and watch the basket. That's what some people do. So it really does depend. But what's really, I think, the most important thing, and I genuinely believe this, is that you listen to other people, but always make your own mind up, because it's like, I would change my view. If I get something, look at something, think, okay, that's going up, and then I might off air think, actually, you know what, I was wrong about that. I think that's going to go down. That's why it's better to learn from what works for you, than to always be reliant on what somebody else is saying. And it's like with fundamentals, I think it's harder to do that, because obviously you do a lot of research that many other people don't do, and I certainly don't. So I'm always keen to hear about the fundamentals, especially in emerging technologies like these. But when it comes to technicals, there's no reason why everybody shouldn't be just sort of looking at their own charts and making their mind up. You might call it better than me. So I would just encourage you to do that, because it can not only help with your analysis, but it can dovetail with the fundamentals that you're looking at. Now, there are times when the two diverge, and you're going to have to make a decision as to which one you follow. You can follow the technicals or fundamentals. I personally would always go for the technicals, because I think, well, if the market is good, it will move up, and therefore that's what I'm looking for. But there's people who've sort of averaged into stocks that they've believed in the long term, even though they've gone down, and that's worked for them over the long term. So it just really depends on your own perspective.
Absolutely. Would you mind if we take a look at the Bitcoin chart and then some of
Yeah.
the majors?
Yeah, sure. So as I say, with the Bitcoin chart, we're still in this consolidation. So we're looking for this breakout. And if I can just put a horizontal line at the level that I think it would have formed a base. Now, the type of base I think we would have formed is a double bottom if it breaks this 21,868. But at the moment, if we zoom into it here, you can see it looks very triangular. So we can draw a resistance line all the way down here, which is almost perfect. It's an almost perfect line. And this is usually an indication that the market is going to squeeze lower. So just ignore that top line. It's this line here. So this line here against, got to come back in there and then draw this line here. So that is a triangular constriction. And so the market is, the lows are getting higher and the highs are getting low. It's getting painted into a corner as I see it. And then eventually it will break out. So we've got two really key lines. We've got this line. If it breaks that, then breaks this support, then where's the next support? The next support is here, 17,563. And if it breaks that, then we're going lower. So if then is how I see this. Now, if it doesn't break this by the end of this week, beginning of next week, it's like, well, if it's not going to go down, it's going to go up. So the risk can revert by it not moving lower. And the trigger point, trip line, is 21,868. So if it breaks that, it would have made the low 1, 2, so a double bottom. And then we'd be looking for a move up here. Now, Ethereum is exactly the same. So, different technologies look extremely similar. And again, to me, what's interesting about that is that the market is trading very technically, even though they are different products. And it's in the same way that gold and silver might be looking really similar, and platinum, even though their industrial uses are completely separate. They're just in the same basket, and they're trading a very similar way. So what we've got here is a similar triangular constriction that gets confirmed on a break of this lower line. And if it does start to head lower again, then I've got this 677 as my next target. And I would hope that would be the end of the bear market should it get to that point. So I would imagine that if the dollar is moving higher, it will be reversing, and other things like rates will be falling much faster. So what have we got here? So we got Cardano, which is looking, again, still very compressed. The rallies have been small. We had a small reversal here, but look at these moving averages. They're still going down. So it's not confirmed as a low. So this looks more like a descending triangle, which again is a bearish pattern, as opposed to a symmetrical triangle, which is which obviously is as it says, it looks symmetrical. But Cardano is making a descending triangle, but it's managing to hold support. So what happens is it keeps testing this support, and then it breaks it in a really aggressive way, and then hopefully we'll get the end of that move. So if you invert the dollar index, this is exactly what the dollar index did. It had this reversal, then it went down, or back up if you reverse it, and then it broke through. So there is a time scale. If it doesn't do it this week, then the risk reverts from down to up. So so let's have a look at Solana. Now, see, Solana, that descending triangle, it made the descending triangle here, but the descending triangle here would normally be a continuation pattern, which means that it should have gone much lower, but it didn't. It went down and then it recovered the trigger point. So the shorting point would be at 36. Well, it's back over 36. It's trading around 36 now, but any short trade there hasn't really worked very well. So that's an interesting sign, and it's something that I've seen in some of the other markets. I had a very quick look at the picks that you asked for this week, and there's a couple that are doing something similar. So I think it's really interesting. It's a very interesting point right now to be looking more closely at the altcoins for divergence against the majors.
By that, what do you mean specifically?
Well,
That
what I mean
first, and then the altcoins follow.
Well, no, it could be that the altcoins are starting to move first, and then I mean, yeah, I can't explain why that would be the case. I've no idea why that would be the case. It shouldn't be the case, but markets do what they want. So I try not to worry too much about why it's doing it and just look at what's going on. But Solana, as you know, you probably know more about this than me, but I just sort of heard through the grapevine they had a bit of a problem, and it sounded like that it was really going to collapse quite a lot further and a bit more aggressively. So given that it's only moved down a little bit and then sideways, I think is a pretty good sign. Now, it's not screaming buy, it's not like a massive upward trend, and I wouldn't just shut my eyes and buy it and not look at it for months, but I would say that it's if I was short it, I would be a little disappointed in the price action. So that to me is a positive, whereas with the other markets, or some of the other markets, that the people that are short them or waiting to buy, from a technical point of view, are being justified as being correct.
Yeah, could we take a look at these? Are some of the viewer suggestions from last week. Now, if you have some suggestions of what you want us to look at next week, feel free to put up to 2 and put them in the comment section, not the chat section, and we will include them. So the first suggestion, let's take a look at, is Drife. Now, Drife is like a competitor to Uber.
Yeah.
Using decentralization as well as technology to take a lot of the overhead off so that drivers can make more money while riders can pay less. And it's got a different model than Uber so that drivers can make actually 100% of the commissions that they make from rides, and they just pay a monthly fee to Drive to be a driver with them and manage that. So the incentives, I feel like, are aligned, though they have some very big competitors. Their token with the rest of the market has been savage since its previous highs that took it all the way to 24 cents. And so those that like to buy cheap rather than expensive, well, the prices are at some pretty good lows here. Will it go further down? Could. It always could. But it's looking like to me, that it's showing some bottoming signals. What do you see in these?
Yeah, I would like to just point out this this triangular constriction pattern here, just because it's like you see things repeat. That's part of the reason why we look at charts in this way. So the trend has been down, and there is a triangular constriction similar to the one that we're seeing. And this is the sort of price action you would expect to see from this type of pattern, i.e., it's got to confirm quickly. If it doesn't confirm, then the risk will revert to the upside. So in other words, if it doesn't move down, it's got to move back up. So as obvious as that sounds, it's like quite a lot harder to actually trade it, but that's the psychology behind it. If the train's not moving, people get off it and they go buy some other form of transport, to use a transport analogy. But here we have a potential reversal pattern. It's very small at this stage. So the size of the reversal pattern indicates how much buying there is, or what we call accumulation, and therefore the size of the potential reversal, so the size of the move up. So the bigger the potential reversal, the bigger the move higher. But that doesn't mean that there can't be some very decent percentage moves in a very short space of time. So as you see, this is like one low, and this is another low that's potentially coming in. We have to break this level here that I put on the screen. So it's at 0012. So if it can get through 0012, then that would complete a minor double bottom pattern. That would be the first kind of buy signal that I think I would have seen for quite some time. And then we can start seeing how it reacts to the previous shorting point, which would be around 0014. So that's the next resistance point, and it would be the target. Now, if it starts to do that, then we're going to be building into something more interesting. It will have broken the downward trend, and it will be on its way to forming a fairly decent base. So we're not quite there yet. It does need to jump over this first tripwire for me to get interested in it. But, once again, we're seeing from the 14th of June to, where we are today on the 6th of July, the market is still in the same place, despite, some relatively bearish sentiment. That's the first sign of what we call accumulation, like when people are bearish yet the price hasn't moved any lower. So I would like to see an impulsive move, like a kickoff move that indicates that some shorts are being covered or some funds are coming in to start a trend to the upside.
Perfect. I'm going to share my screen real quick. And so when I look at the fundamentals of something, so we have Drive here. Some of the numbers that I look at is I look at where this market cap is at. So it's market cap, which is the current price of the token times the number of tokens in circulation. So the fully diluted market cap, which is this number here, which is 3.3 million, is the price of the token times all of the tokens if they were in circulation. So that is a very attractive market cap. What you see when think of the investment cycles is the pendulum swinging back and forth. And the pendulum is not in the middle. It goes too far to one side and then too far to the other side. And so with so many projects, and keep in mind that these are risky projects, they could fail. If you think about early business failures in any technology industry, the failure rate is pretty high. So number one, we don't know if these companies will make it long-term. We're not necessarily looking just at long-term. We're looking at, okay, the pendulum is swinging too far to the downside, which is fantastic. That's what attracted me to crypto, is that it swings too far to the upside and then it swings too far to the downside. And though it seems like it takes forever, within a 4 or 5 year period is the entire cycle of a top to a top or a full bottom to a bottom. And so the full bottom of the previous market was 2019. Here we are in 2022, and we're either at or very near another bottom, a very attractive bottom where we see these market caps go so low. And what I like about that is when they swing too far to the upside, you see gigantic price growth. So for this to go to 100 million, that is over 100x from here. That's close to 150x from here. And so in $150 million market cap, it's not a very high market cap. If it went to $1 billion, then you're talking about massive increase. Now, there's a long ways for this to go to $1 billion. We would need a lot of money to come into the market. Plus, Drife would have to show that they're continuing to do well. And so those are the kind of risks that I take. I do hold a lot of Drife myself. It was previously as high as 25 cents. And it's crazily low now. And so do I ever go all in on one like this? No way would I ever go all in on one of these. But I take lots of risky bets like this, because even if 8 out of 10 fail, and 8 out of 10 of my picks don't usually fail, but some of them do and some of them will. But let's say 8 out of 10 fail, but it does go 150x and I got 2 of them right. Well, the two that went 150x massively balanced out the 8 that completely failed and went to 0. And so I was only right 20% of the time, and yet my gains were overall about over a 10x in gains. In fact, much higher than that. And so that's why I like this type of investing. And some people get frustrated because it's hard to time the exact bottom. You see that the price climbing down here, and you're like, it's attractive here, and then it goes even lower and then lower. And so the methodology that I put in it's as simply as the summary that I use, which is I buy when it's boring. And we're definitely seeing a very boring market. Now, I just switched it to log scale, which is what Paul uses all the time and many investors do. So you can see percentage decreases. It makes it way easier to see when the prices get so low like this. You can see very specifically that it has continued to get lower, making it even more and more attractive. And these are time periods that I dollar cost average more in. And many people get frustrated, including myself, that the price goes down during these times because it's frustrating and the price goes down. And I remember in 2020, early 2020, being very frustrated that the prices were going down still, and it was hard to time the exact bottom. And I remember looking at my portfolio, and it was down 2/3 from what I'd put in. And then all of a sudden it was way, way up. Now, I have a friend that invests very differently than me. And we were together, sitting together a year later from that point. And he said, hey, yeah, like, what would you say your gains had been in the past year? And I said, well, I'm up about 11x. He invests very cautiously. So he pulls out the first sign of any trouble, and he very cautiously puts in. And so he had been investing for a number of years. And I said, what would your gains be in the past 12 months? And he said, well, I'm up about 30%. So the strategy I take is risky, and it's not for everyone. And for him, he takes a very cautious approach. But when things go well, even in a good market, his very cautious approach leads him to very minimal gains. And so my analysis is from this point. Paul, fair to say that you're open to investing in even the majors, even the smaller ones, as long as you like where the price action is going and you like the overall timing of where it's at.
Yeah, I like the patterns. So I think I start off with the macro, the big picture. Is it overall bullish or is it bearish? And then, you could buy Bitcoin, I suppose, at certain levels. But I totally agree. I think the risk against reward with looking at the altcoins means that, yeah, they can go down, but there's obviously much more upside. And I'd be looking to put a limited amount in, which can turn into big money. So a chart is a chart is a chart to me. I don't really mind what it is, but it does remind me of the beginning stages of the dot-com booms where you just saw massive volatility. And the thing about volatility is there will come a time when things settle down and these prices might not move as much as we're experiencing now. And it's another thing to get used to, because this is incredible volatility, like absolutely off the scale for any asset class. So if this is your kind of first foray into a market, just remember this is so unusually volatile that it really takes a lot of skill to try and navigate it. And until, for me, things settle down, I am just in cautious mode, and I have been for a long time. But it's just great to be able to see all these coins. And this is what I love about doing the show. I get to see what your viewers think are interesting, and that kind of forces me to analyze things that I might not analyze in the first place. So hearing about these stories now is great. But yeah, I'm looking for a certain setup, and to be fair, we haven't seen anything that's so bullish that I've been saying yeah, let's get it. But there will come a time, and it's like, for me, it's just a waiting game. Eventually we're going to see a load of setups. They probably all come at once.
A lot of setups, yeah, and they will all be within a 1 to 2 month period that will see a lot of amazing setups, and they're coming. It's building towards that. It's not right there because we're in possibly the reversing trend or near the reversal of the trend, and the trend has been downwards.
Yeah.
Some of the trends been downward since March of last year, and there were some things that did well even in October, but it wasn't the whole market. It was just a part of the market that did well in October. So generally, we've been in a downtrend for about 14 months, with a few things then peaking in October. And this period's a hard period where a lot of people wash out, but it's actually one of the most delicious periods to be here, to be informing yourself. Maybe even if you like my approach, dollar cost averaging into things. If you're more like Paul's approach, you have your capital sitting on the sidelines waiting for these correct setups. And that's how he plays it. Could we take a look at the next one? This is Hadera.
Yeah. So Hadera is this is again matching the chart that we saw in of Bitcoin, and perhaps a bit more like Cardano as well. The way it's just sort of gone down, it's resting on support. Now, this support is massive because it comes from this kickoff here, which I think we might have discussed before. But this whole zone here is massive support. So I would like to see it hold. I can't say buy here as yet because it's just sitting on it. It's had one bounce, but it's come back to it again. So because I'm being ultra cautious with everything, I'm not going to just buy in on a level. I need to see it confirmed. I think I'm going to have to wait here, but what we have is some fantastic technical levels, in the sense that you've got this level here at just over 7 cents, which was support here, and it's support here, which is now resistance. So if it can travel through here, then to me, that's the green light. I would buy that because it would make a double bottom. It'd be breaking a downward trend. And if I was speculating, and I mean speculating, I could buy it here at this level, but the stop out point, the parachute ejector seat, however you want to describe it, but I would not be holding it if it trades below this 5 cents level. So to me, it's sort of it's on the edge of a cliff, as it were, and is it going to back away or is it going to fall over? And I don't know the answer to that as yet, but this level is key. It is key because we can see how this was the beginning of this whole trend up. And you might think, well, does the market remember that? But yeah, they do. They do. Market does remember levels from a long time ago. So if it's to hold, I would expect it to hold, this week. If it can hold over this for this week, but equally, we're going to get the answer very soon as to whether it wants to break. So cautious hat, I would wait. Speculative hat with a tight stop, but put small amount in it and see what goes on. But I would prefer to feel much stronger about a position before putting money in it.
Yeah, for now it's just wait and watch, right? Because it is still at a risky point.
Yeah,
it continue down further, even though it's hit some pretty strong support levels. If it breaks through those, it has quite a ways to go.
That's the thing with these support levels. They are there to be tested. I like to see them hit and the market bounces, like putting your hand on a hot plate. It just goes straight up. It goes, wow, that's a great level. I want to buy off that. When it comes back, I mean, it did that the first time, which is really good. It's just that it's come back again, which is why I'm worried. It's sort of gone up, and then does it give you another chance? Like, when the doors are on the train and they shut and then sometimes they open and they let you on again, that happens very rarely, and it happens rarely in the market. So maybe this is one of those times, but I'm not 100% sure.
Yeah, you want to just take a better look and wait to see how it comes together.
But I'd like to watch this over the next few weeks because of that.
Yeah, makes sense.
It's a good call. So thank you for sharing it.
I love the viewer picks. All right, let's take a look at Theta.
Yeah.
Now, Theta was all the rage for the longest time. Everyone's like, buy Theta, because it had taken this gigantic climb up, and people have recency bias, right? And so I had actually been playing around with Theta during the bear market, and I would buy it when it would touch lows, and I would flip it when it would double. And I flipped half of it when it doubled, and then it went to triple what I bought at, and I sold the remaining half. Really excited about that. And then I was going to try to buy in. Well, it never touched down to those previous lows. and it climbed all the way up. Now, I did roll those gains into other things that did well, but you hate to be out of ones that go through this monumental climb, and it went all the way to almost $17 before then coming back down, and it's on a 93% sale or something. And Theta is a very interesting project that I hope continues strong. They have some of the best team members, some of the best people in the space to move forward with this Web3 coupled with video and streaming. So their prices suffered, and a lot of their people that felt like they had diamond hands have sold and washed out into stronger hands buying. So it's really interesting how it's kind of sat at this level since late April, right?
Yes. Yeah. So what I'm saying here is so I initially put a Fibonacci retracement. So when you've got anything like this, you've got the beginning of a trend, really obvious that this is a key low, and then you've got a key high, so it's really obviously a key high. What I would do is put a Fibonacci retracement level on it, so to see where the 50% or 38.2%, 50%, and 61.8% percentage points are, to look for natural reversal of the trend at those points. But because it's percentage terms move such a long way, if we take it off the log, you'll see it's already gone way beyond those percentage points. So there's no point me putting those on. So the next question is, well, what is the trend? Well, that's an interesting question, because if you were talking about from here, you'd say the trend is up. If you're talking about from here, you'd say the trend is down. So it's kind of halfway between up and down. So now the dominant trend, the most recent trend is, and what I think we've got to be operating from is from here. So the most recent trend is bearish. So, but it's in the context that it's important. This is not new lows. These are not new lows. It's not like it's down here and breaking into fresh lows. This is a correction of an upward trend. So the next question is, what is the price action doing? Is it still trending aggressively like here, or is it consolidating? Well, it's actually consolidating and potentially making a reversal. And this is all happening, again, when sentiment is very negative. Now, this is not a complete pattern, but I would say if it goes through $1.50, then that's enough for me to say it's a short-term buy with a stop loss. I would say if it can be sustained, a loss, stop loss that would be around 107, that sort of level. The reason why I'm saying those points is because you can see that there's support here, support here, support here, and support here. So that 107 level would represent if it broke it, then it would represent a change in sentiment. Ultimately, you could take the 0.95 level, but I would like to get out a little bit earlier. I don't mind rebuying something and having a couple of goes at it. But this is not, it doesn't look like a continuation pattern either. It's not like a descending triangle or symmetrical triangle. It's too, how can I describe it? It's too messy and volatile. And that's what reversal patterns tend to be. They tend to be messy because you've got the capitulation of the trend where people are just going, look, I've had enough, I want to get out. And then you've got long-term players and people who are smart enough to do the fundamental research saying, look, this is a great company, we should be buying it. Now, I'm not saying it is, I'm just saying they say it is. And then you get this change in dynamics, which needs to be confirmed by a breakout to the upside. But that's where I think we are now. So this is, again, a strong watch. We've got to keep a very close eye on this, because if it's going to reverse, it could be very soon. So yeah, again, that's not a clear cut, this is just going down. This is exhibiting what we call accumulation signs. So very much worth watching, especially on a break of 1.5.
So yeah, for you, this is a wait. For me, this is also a wait. Though I like Theta as a project, I'm an investor and I look for entry points that I really like. And for this one, I would love to see it come down further before I'm interested in buying in. And even though it's retraced about 92%, it did run all the way up from 7 cents. And so it's quite high from that point, even though it's retraced some, and it may never get there, and that's okay. If it takes back off from here, that's all right. Maybe I would take a short swing trade on it, but I'm looking for ones that I can take and have what I feel to be a strong chance of a 20 to 150x ride up, should I be right about it.
Great.
And this one could do 20x. It's just the range is probably anywhere from 5 to 30x would be, from this point, would be my guess for the next ride up if it does go well. All right, let's take a look over at Alpha Zero.
Yeah. So Alpha Zero was one that wasn't coming up on my system when I did a quick check. So do you have like a mnemonic for it or something?
I'm not finding it either. It's not one I was familiar with. One of the viewers suggested it, so we're going to have to move on because I'm not finding on either CoinMarketCap or CoinGecko.
Yeah, maybe it was a autocorrect or something. It sounds like a cool name, but can't find it.
Okay, Alpha Zero. I did find it on Nomics.
Ah, okay.
Interesting, but it has now. Wow. Even on Nomics, the data is just very minimal, but looks like it's on the blockchain contract.
Right.
Just
So
information for us to go over here. So we'll have to go on. The next one is Cellframe.
Yeah. So Cellframe, again, you know, when I was talking about how is something in the bottom right of the chart as opposed to correcting a bigger trend, this is bottom right. So it means we've got to be very careful. Now it's made a potential double bottom, that's one low and this is another low. And so if it triggers through 27 cents, then that's a short-term buy from a technical perspective, but it runs into resistance at 30 cents almost immediately. And this is a small pattern. So it's the first sign of a reversal. It's good enough to trade on a break, but I would also be ultra cautious because remember what I was saying about the size of the pattern indicates the extent of the reversal, and the size of the potential pattern is very small. So I would just be a little bit cautious here until we're getting a clearer impulsive trend that we can ride with. But having said that, there is a pattern there. So it's good to look at it. I mean, I'd like to know a little bit more about it and how it might be special. It made a similar pattern here. So it was trying to base 1 and then 2, but didn't quite make it to the 43 cents area. So, you know, it's tried to base and failed. That's a similar sort of pattern. To be fair, this has gone on just a little bit longer. And it has rising lows as opposed to falling, which is a more positive sign for this. But yeah, it's a good one. It's a good one to watch. Again, it's not a complete pattern yet, but we'll have to see whether it does so in the next week or so.
Yeah, I want to share a couple things about Cellframe. This is interesting. I was able to get in through a launch pad in the early days on Cellframe, and I made a ton of money on Cellframe. But it's since retraced, right? So it went up tremendously, and I was trying to find what the ICO price was, and I'll show everyone how I search for that. A lot of times it's findable, but it's not always easy. So the current price being about 25 cents, it went from the launch price was somewhere around this, perhaps even a little bit lower. And you're seeing as a lot of the tokens get put into circulation through what we call the vesting schedule, that it drives the price down. Now, this is also correlated with the market generally going down. So back when everything took off is when this launched. And so March, April, May, those were very good months. And it peaked out in March shortly after launch, and it went about to $6, even though it only shows 552 here. And it's since retraced all the way to about 25 cents. Some of the things I like about it is market cap is still fairly low. And I'll talk a little bit about the project in a minute. So 7.3 million. Most of its supply is in circulation already. So almost all of it. And the max supply, it's just shy of the max supply as well. So that's good to see that there's not going to be more tokens vesting that get kind of dumped on the market and push the price down. Let's see if it's got a discrepancy. It says here fully diluted market cap is, so the market cap, it says here the fully diluted one is 7.7 million. A little bit of discrepancy between CoinGecko and CoinMarketCap. This is saying, oh yeah, fully diluted 7.7 with the current market cap of 7.3. Okay, so they agree. Circulating supply that both of them have is roughly the same. One of the things that I search is I literally search the project name, Cellframe, and then I say like ICO price. And you'll see some come up, and then you click on them, and it will give you some of these sites will then give you what the original ICO price was. But I want to reference this as a little bit of a concise write-up on what Cellframe Network is. Cellframe Network is a scalable, open source, next generation platform for building and bridging blockchains and services secured by post-quantum encryption. Now, something that comes into crypto investors' minds every once in a while is, oh my gosh, what happens as a lot more people get quantum computers and they use quantum computers to try to break networks? And that's been a concern a couple of years ago when things were doing well. It hasn't really been much of a concern, but as that concern comes into focus, people look for, well, what might be quantum safe, right? And so Cellframe, that's part of their narrative. We offer a stage for enterprise and developers for building a vast array of products ranging from simple low-level TDApps to whole other blockchains on top of the Cellframe network. We believe that the next paradigm for blockchain technology is mass adoption. Our platform strives to expand the use cases associated with blockchain technology. Essentially, providing extremely high transaction throughput based on the original shading implementation. I think that's supposed to say sharding implementation. In addition, post-quantum cryptography makes the system resistant to hacking by quantum computers, which are not far off. And there are quantum computers out there. Google has one, but they're not in mass use yet. Based on the original sharding implementation, I think is what that's supposed to say, Cellframe can provide extremely high transaction throughput. Post-quantum cryptography makes the system resistant to hacking by quantum computers. So yeah, a little bit about them. It didn't give us what we were looking for, though, is what is the ICO price? Because a lot of times we see these retraces retrace right close to what the ICO price was. So here we have token sale. This was 10 cents. So we're not even there. And the reason we're not there, most projects have retraced to their ICO price, is because there's still a lot of expectations and a lot of things going right for Cellframe. So it's only 2.5x from what that price is, which is very commendable, as a lot of their tokens have come into circulation, essentially being dumped on the market. Its price has held up really good. I would say that's a really good sign. And so for me, I actually am going to look at this and probably make a buy. I pulled up the markets that it's on. So it's on Gate.io. It's on Uniswap. They also have it on PancakeSwap, which is nice. That's probably where I'll buy it, just for lower transaction fees. It's on LA Token. So a few exchanges out there. But yeah, great suggestion by one of our viewers.
Great stuff.
All right. Well, that concludes our viewer picks. So if you have a pick or two that you want us to review next week, go ahead and put it in the comment section down below. Thank you all for tuning in. Paul, thank you so much for joining us. We really appreciate your input, your thoughts, get your perspective. So it's kind of like a training ground for people to really start wrapping their mind around price analysis and what some of the different things can mean. Thanks so much for joining us, Paul.
Always a pleasure. Thanks, guys.
Now, I know the general market is pretty slow and a lot of people are worried about that. Just know that during these downtimes, good decisions that you make now can have life-changing consequences for the good, as the market does eventually turn around and the pendulum is swinging too far to the downside. And that's not a bad place to be. That's part of what attracted me to crypto, is that when it gets cheap, sometimes it gets overly cheap. and it makes for a really good time to pick up, and then it gets overly expensive, which makes not a great time to buy, but a great time to be taking profits. We'll get to that place again. Thanks so much for joining us. We'll see you next time. Remember, no rain, no gain.
Came into the space chasing all of the gains, chasing the pumps and all of the hype trains. But like in life, shit right before you could. Was told to buy when it was pouring like a rainmaker should. I buy when it's down, don't chase the boats that I miss. Cause I always make the time in mind. I sit the one out cause I'm patient like that, and I'll wait for the right time. I sell when it's high, I buy when it's low. They call me rich, they call me smart. I'm just a rainmaker running the show. Calculated investments, I don't leave with my heart. Principles are simple, they're leaving a mark. Buy when it's boring, just gotta be smart. I sell when it's hype, like all the channels they pump it. That's when I was selling, got parabolic and dump it. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes it time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Time is never better, the time like the present. This next 5 years is a gift and it's feeling like heaven. I'm committed to learn, studying to know that nothing comes easy, but with knowledge the game show. Sticking out this wrong cause soon will come a bear market. Learning and growing, and when it's slow will be the target. Naysayers come out, Bitcoin is dead. The massive decreases can get to your head. Sticking around, the time is better. Strong like that, I'll let the others be fretters. 2 years time, the ball will bring back the gains. That makes it worth the effort cause here comes the rain. So let's go rainmakers, let's make it all happen. Let go with the hate, let the haters be crapping. I'm here for 5 years, let's do this together. The time is right, the time could be better. They call me rich, they call me smart. I'm a rainmaker, making my own start. I'm with the future, learning the past. Makes it time fly by, years going so fast. The game plan is mine, I'll own it now. When I reach the top, haters asking me how. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck. Haters be hating, the time to slow down. Addressing what they say when I'm wearing my crown. They're chasing green candles like someone who was new. I got a vision that was bigger, helping me to push through. I'm still human and sometimes it is rough, and that's what makes me special, simply I stay tough. Cause I'm a rainmaker, investments I love, and I follow what I learn, not relying on luck.